Welcome back to my daily report market analysis videos with me, which is market analyst at Hantec. On Wednesday, 15th of Jan, looking at cable, which has had an interesting 24 hours really, had a decent reaction higher yesterday. Dips are still seen into the 29 figure to 30 figure area, still seem to be used as a buying opportunity. You had that positive candle yesterday which broke a sequence of negative candles and started to sense a turnaround, and we've had a couple of factors affecting cable today, whereby we had comments from Michael Saunders, Bank of England member, who didn't explicitly call for a rate cut and sort of suggested that it would depend on sort of deterioration again. Similar sort of towing the line of recent comments from other Bank of England members. But then we see the inflation data for the UK really quite significantly missing expectations and falling away. Now, falling or low inflation is certainly rate cut territory. But is it actually a negative for the UK consumer? I would argue no, seeing as you've got wage growth pretty strong still, around about that 3% and inflation down at 1.3% on the headline would suggest you're getting some pretty decent real wage growth now. So not necessarily the worst thing in the world for the UK consumer. However, I think the argument would be certainly that the Bank of England starts to edge closer to a rate cut from that inflation data, and that is a drag on sterling today. Not a decisive move lower yet. We're still holding the support of yesterday's low. We have had that move lower, but as that support comes in at 29.50, is that a point at which we still see the sort of bottoming out and buying opportunity area? You've got that December low 29 figure still there. So we're still seeing these run of higher lows, although obviously that 29.50 low could come under pressure if the market really does turn against sterling this afternoon with that inflation data. Momentum indicators still positively configured on a medium-term basis, but you certainly wouldn't really want to see 29 figure now breached, because that starts to then turn the big trend that's possibly starting to build. That would turn it lower and negative. So it is an important level of support, 29 figure, but in the near term, 29.50 is still there, and it'll be interesting to see if it gets tested. That sort of turn away and turn lower on the momentum indicators is certainly a disappointment for those who have been hoping for a recovery on cable today. Initial resistance around the 30.40 to 30.50 mark, and then above that you need to really see it above 30.95 to really suggest a recovery is underway. So we're quite away from that at the moment. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.